This is Ag Matters PM from the Iowa Agribusiness Radio Network, your daily recap of the information that affects Iowa's farmers, producers, and consumers right here in the heart of the heartland. With reports from our award-winning team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Dustin Hoffman.
Hello, everyone, and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Dustin Hoffman. Coming up a little later on in the program, we will have our closing market analysis from the folks at agmarket.net. But first, we're going to hear once again from Iowa Renewable Fuels Association Executive Director Monte Shaw. At the Iowa Renewable Fuels Summit, when he addressed the crowd, he made a comment that how personal politics and market access for ethanol and other biofuels cannot run into each other. In fact, they're going to be a hindrance rather than a help.
Now, I cannot overemphasize how massive these new markets are. If renewable fuels can provide just a portion of those low carbon needs, it could drive demand for farmers for the next 20 to 30 years, even when accounting for that never-ending productivity increase of American farmers. Now, I also think we need to be honest with ourselves. We are not the only people looking with wide eyes at those new large markets. Brazil, China, India, and many others are rushing to put themselves in a preferred position for those markets. And at the same time, our competitors are moving forward. We find ourselves fighting a defensive action simply to protect the ability to use the tools and technologies necessary to produce ultra-low carbon renewable fuels. Tools like carbon capture, use, and sequestration, CCUS, and regenerative agriculture. So let me take a moment here. I want to pause just a second because this is something sometimes people don't fully understand. And I want to talk about that phrase, ultra-low carbon. Now, I would assume, there's some pretty bright lights in my eyes, but I would assume out there that there are probably some of you in this audience who think that carbon emissions are an existential threat to the future of the human race. If I was a betting man, I would assume that there's probably even a few more people out there who actually don't really care about carbon emissions, and maybe some who even think it's some kind of government hoax just to control more of our lives. I want to say to you all today, I don't care. I don't care. Now, I'm not trying to be rude. What I really mean by that is that our personal political viewpoints on carbon are irrelevant to these massive new markets. We have customers willing to pay us for ultra-low carbon renewable fuels. It is simply good business, not politics, that drives our desire to produce those fuels. So as we work on policies that are going to move our industry forward, to drive demand for corn and soybeans, and to return the rural economy to a path of prosperity, please leave your politics on carbon at home. So much is at stake. We only seek to provide the products that our customers want to buy. If petty politics ties the hands of American producers, our competitors will be more than glad to step up and take those markets. And today I do think Midwest agriculture is in a crisis. I still think it's a small c crisis. However, I do fear that if we continue to ignore the fundamental supply and demand metrics out there, and we don't move rapidly to pursue these new markets that I just talked about, and we don't pursue the tools and technologies necessary to get them, I fear that in a few more years, we're going to see the crisis of today turn into a capital F, capital C farm crisis. And I don't want to go back there. So for that reason, I hope you'll stay after lunch. We have two panels this afternoon. Experts are going to be diving into both the new market opportunities that are out there, as well as the tools and technologies that we need to get there. And we're also going to have economic experts to answer your questions about the impacts of both the actions and inactions in that regard. Now, hopefully I've convinced you that there is a demand solution to our current farm challenges. If so, how do we do it? Well, we must turn the inaction of the last year or so into policy victories. And we're going to dig into that right after my remarks with our policy panel. And I think you're really going to enjoy the insight that they can give you. So looking back on 25, or actually let's rewind all the way to December of 24, we see several areas of policy excitement that ultimately stagnated into frustration. There was a year-end funding bill in December of 2024 that included provisions to remove the outdated and unjustified restrictions on year-round E15 sales. But one tweet from Elon Musk put that proposal on the ash heap of history. Just 2 weeks ago, another E15 compromise, another ray of hope for farmers, disappeared into disappointment of congressional action. And I fear if we don't see Congress act on E15 in the month of February, right now, I don't think we're going to see congressional action for years to come. 2025 was also when we were supposed to have the new 45Z Clean Fuels Production Tax Credit kick in. Instead, we were left without regulatory guidance for over a year, which was frustrating to ethanol producers and kneecapped our biodiesel producers. Last year, we also saw the excitement over a very robust RFS blending rule for 26 and 27 morph into anxiety because we're still waiting. We're still hoping that it might be done a quarter of the way through this year. So quite frankly, I'm glad that 2025 is behind us. And because I'm a glass half full guy, I think that many of the seeds we planted in 2025, as frustrating as that year was, might actually bear fruit in 26.
And that again was Monte Shaw, Executive Director of the Iowa Renewable Fuels Association. Let's go ahead and take a look at the closing numbers. And for that, we're being joined by Ethan Robson of agmarket.net. Ethan, it's been an interesting week market-wise, a lot of yo-yoing back and forth, especially in the soybean side of things. How do we wrap up this week?
Definitely has been an interesting week market-wise. Soybeans, just most of the markets in general, took a little bit of defensive tone going into the 3-day weekend. Reminder, no trade Monday due to President's Day. Open back up Monday night, rocking and rolling. Corn market today, a little bit quiet, trading both sides of unchanged. March ended up a half cent, 431 3/4. May was unchanged there. Soybeans been the big mover this week. March soybeans ended up being down today, 2.5 cents, 11.34 3/4. Off the lows too, so good to see it be able to claw back there. New crop soybeans down a penny at 11.15 Wheat markets down 3 in the March, and then down about 9 to 10 cents in the deferreds.
All right. And then, obviously, like you said, it's been a back and forth week. A lot of it's been trading, rumor and, what we could be seeing, maybe China buys some more, which we talked last week. Now it talks like President Trump might be meeting with President Xi. It's just, there's a lot of up and down here. And I mean, to see it go on defensive after a big rise yesterday, I mean, it really feels like it was a whole lot of nothing in the last 24, 36 hours.
It does. Yeah, it's definitely an interesting time because it all has been rumors. I mean, we saw President Trump's True Social post is what started the incline for the soybean market. Saw some interesting commentary out of a newspaper in China yesterday or 2 days ago, confirming that they're excited or planning President Trump's arrival in China. But besides that, relatively quiet as far as U.S.-China relations there. U.S. and Taiwan actually signed a trade deal earlier today or last night too. Going to be interesting to see how that affects U.S.-China relationships. And so far, no other comments from U.S. officials from that.
Okay, well, then let's turn our attention to the livestock side of things. It's been an interesting week there, as well. What did we see the cattle and hogs do on this last trading day of the week?
Yeah, a little bit of the same tone there, a little bit defensive there, just taking a little profit, give or take there. April contract live cattle down to 240.62 there. Feeder cattle relatively down in the front months, up in the deferreds, 363.45 in the April contract. Lean hogs taking it on the chin the last week too. That April contract down 55, May contract down 75 at 95.30. 3-day weekend managed money coming in, looking at their positions, just trying to decide, take some risk off of the table. We all know you never know what could happen 3 days weekends, especially on Friday the 13th as well. So managed money just trying to manage the risk there.
All right. Well, Ethan, if folks want to look at some of the options that they have and look at some of the intel and kind of make their marketing moves based on that, what's the best way for them to start that conversation?
Yeah, give us a call here in Bloomington Normal. We'd be happy to help. 1-800-779-1515. Visit us online at agmarket.net. Has all the information you need.
All right, Ethan. Ethan Robson's been my guest here on the Closing Markets. Thanks so much for the insight. We'll talk to you again real soon. Enjoy the weekend.
Yep, you as well.
And that again was our market analysis from the folks at agmarket.net. Let's take a look at how the markets closed on the Iowa Agribusiness Radio Network market screen. At the close, March corn was up a half at 4.31 3/4. Soybeans down 4 1/4 at 11.33 even. Soy meal up $1.30 at 309.20. Soy oil down 46 cents at 57.08. Chicago wheat down 3 3/4 at 5.48 3/4. Kansas winter wheat down 11 1/2 at 5.42 1/2. Kansas spring wheat down 4 1/2 at 5.75 even. Minneapolis spring wheat was down 5 3/4 at 5.71 3/4. Oats up 1 3/4 at 3.10 3/4. On the Merc live cattle up 57 cents at 243.07. Feeders up 42 cents at 366.15. Lean hogs down 55 cents at 91.27. Pork cutouts unchanged at 103.40. Class 3 milk down a penny at 15.05. And that's been a check of our closing markets, and that brings us to the end of today's episode. And after 903 episodes, it brings us to the end of Ag Matters PM. We are going to be changing how our programming works from now on going forward. And starting Tuesday, when the markets reopen after the President's Day holiday, we will strictly be bringing you video market analysis with the folks at agmarket.net. We thank you for the more than 3 years you have been watching the Ag Matters PM program and for giving us 903 episodes of bringing our content to you. We will still be bringing you content through our YouTube channels and also through our social media programs as well. And you'll still be able to follow us on WHO Television, Channel 13, and hear our Agribusiness Report. From the Iowa Agribusiness Radio Network studios in Des Moines, I'm Dustin Huffman. For the final time, for Mark Magnuson and Riley Smith, this has been Ag Matters PM.